You're very welcome to this morning's webinar brought to you by BrightPay. And we've already completed a sound check with people who had logged on earlier on, so there's been no issues with the sound so far. Today's webinar is going to be recorded, so we will send a copy of the recording along with the PowerPoint presentation to everybody after today's webinar, just in case you miss anything. So today we have two topics. So the first topic is the do's and don'ts of pricing automatic enrolment as a chargeable service, and that's brought to us by Paul Byrne, who is the Managing Director here at BrightPay. I'm also delighted to welcome Steve Pipe, and Steve is going to be presenting pricing advice that will transform your practice, results and life. So first up speaking today we have Paul Byrne. As I mentioned, he's the Managing Director here at BrightPay. Paul is also a chartered accountant, having set up and run his own practice for 20 years before moving into the payroll software space. I'm delighted to say that we have Steve Pipe today, and today Steve will be revealing the keys to pricing so that you can earn more and work less. And this is really an unmissable session because Steve has dedicated his life to helping accountants get better results for themselves and their clients. Steve is the founder of the 250-strong AVN Association of Accountants and the not-for-profit Accountants Changing the World movement. He is also the author of many Amazon 5-star rated books, which the likes of the president of the ICAW describe on the just covers as brilliant. And impressively, Steve has 460 recommendations on LinkedIn, making him the most highly recommended accountant in the world. While his 12 major business awards include being named by Accountancy Age as the UK Entrepreneur of the Year, and recently Steve has been shortlisted by Accounting Web for their first ever Outstanding Contribution to Accounting Award. Today, Steve is primarily going to conduct his presentation on camera. So when it comes to Steve's presentation, I'll just get on there for a couple of minutes again and just tell you how you can increase the size of your camera screen so you can see Steve in full view. Okay. So you're quite welcome to type in any questions that you may have throughout the webinar. So I mentioned there on your control panel on the right hand side there's a question tab, and if you do have any questions we'll address any questions at the end. We'll probably have a 5 or 10 minute questions and answers session with both Paul and Steve. As I said, today's session is being recorded, so we will send a copy of the recording to everybody after the webinar today. So I'm going to pass you over to Paul, and Paul is going to present the do's and don'ts of pricing automatic enrolment as a chargeable service.
Hi everyone, and thank you for joining us today. Okay, just a small bit about myself to start off, and just let me get used to the mouse here. Okay, as Karen said, my background is as a practicing accountant. I started my own practice back in the 80s and eventually grew to a 3-partner practice with 10 staff. While in practice, I provided payroll bureau services for about 30 clients, so I have some idea what it is like in the front line. In 1992, I got into payroll software development, and a large part of my reasoning for this was to make better software than what I was using at the time. Eventually, I began working in software development full-time. About 4 years ago, we introduced BrightPay and Bright Contracts in both the UK and Ireland. Today, we have well over 100,000 employers across the UK and Ireland using our products, and that's a figure that we're hoping to improve on every year. So here is the agenda for my slot today, which I hope you will find useful and give you plenty of food for thought. When talking, I will often refer to auto-enrolment or automatic enrolment simply as AE. You can't argue that the UK's payroll landscape has changed forever. The introduction of auto-enrolment has brought and is bringing employers kicking and screaming into participating in a workplace pension scheme. Auto-enrolment is being rolled out in stages across all employers and started with the larger employers in October 2012. By October 2018, all employers will be required to offer workplace pension schemes to eligible workers. By the end of March this year, over 100,000 large and medium-sized employers had completed their declaration of compliance, enrolling over 6 million eligible job holders into a workplace pension scheme. The pensions regulator estimates that over the next 3 years, around 1.8 million small and micro employers will need to act as a result of auto-enrolment. I think an update to that figure is now 1.6 million at this stage. This means that less than 5% of the total number of employers have staged to date. Employers with fewer than 30 people in a PAYE scheme have a staging date between June 2015 and April 2017, depending on the last two characters in their PAYE reference number. From then onwards, new employers, new PAYE scheme users will begin to reach their staging date, depending on when PAYE income was first payable. These employers will have a staging date of between the 1st of May 2017 and 1st of February 2018. According to recent research by the pensions regulator, over 50% of micro-employers staging this year have not started making plans for automatic enrolment. It is estimated that 7 out of 10 SMEs will turn to an accountant, bookkeeper or payroll bureau for help with auto-enrolment. Many will leave their preparations to the last minute, so do not assume that clients will come to you prior to the staging date. Advisors will find that a large proportion of their clients will contact them very close to or even after their staging date. You may wish to proactively contact your clients to find out when their duties start. It is possible to look up your client's staging date on the pension regulator's website if you have their PAYE employer number. It is important to engage with these small and micro employers that have not yet staged to help reduce the number of latecomers. Trying to backdate auto-enrolment can be a nightmare and may result in fines and penalties. A lot of the companies staging before now will probably have had their own HR people or in-house accountant to help them through the enrolment process. The vast majority of those staging from now will have no in-house expertise. The majority of these employers will not have the knowledge or experience to make informed decisions when it comes to their AE obligations. With the vast quantity of information available, employers are fast becoming confused, bewildered and overwhelmed. These clients will require help understanding the implications for them, their employees and their business. So you have a gift-wrapped business opportunity, and this is business you don't have to go chasing. It is estimated that 90% of an accountant's client base is made up of employers with less than 50 employees, and it is from now onwards that most of these employers will be affected by auto-enrolment. Payroll bureaus need to decide if they are ready to take on AE business. With many shying away from offering this as an extra service, bureaus will need to determine what kind of information and support they will offer to help their clients comply with these new AE duties. Advisors will find that a large portion of employers will contact them very close to or even after their staging date. By the way, if a client does contact you after their staging date and has done nothing, if their staging date is passed by less than 6 weeks, get them to issue postponement letters to all employees immediately. Otherwise, they will need to backdate AE back to the staging date, which is no fun, I can tell you. By offering a complete end-to-end solution, bureaus can generate income and enhance client relationships. If bureaus offer other services such as bookkeeping, tax returns, audits, management accounts, etc., they will have a new platform to reach and upsell to this new audience. You will find that employers will be happier to consolidate all their outsourcing services to one person or advisor. So now that we see the opportunity for bureaus to offer AE as a service, the big question is how to price your auto-enrolment services. Increasing your prices is never very popular with clients, and you may even risk losing a small percentage of your client base. If you are a bureau, deciding what to charge for auto-enrolment services can be a daunting task. Unlike the introduction of RTI, bureaus now find themselves in a position where they can financially benefit from auto-enrolment by offering it as a chargeable service to their clients. With the added workload required to process AE, it is inevitable that clients should expect to pay more for the extra work provided. Finding the right pricing strategy will be a key factor to increasing profits. If the price is set too high, clients may go elsewhere. If the price is set too low, the opportunity to increase revenue may be missed and you could end up working at a loss. Fundamentally, the price a bureau charges will need to cover any additional investment in software and additional hours involved in processing the payroll. The dilemma of how much to charge your payroll clients for the additional AE work is fast becoming a hot topic. There seems to be a certain degree of secrecy surrounding the pricing as nobody is quite sure how to charge. The prices that accountants and bureaus are charging varies dramatically across the market. It is very much dependent on the number of employees the employer has and the level of AE services the employer wishes to be carried out. We have heard a number of different pricing options that accountants are offering to their clients. One example for a small employer is £250 initially to cover the pension scheme setup and staging duties, with an additional £50 per month thereafter to cover the cost of the ongoing duties. However, as I just mentioned, these prices vary drastically across the market, with some firms charging a couple of grand for the same level of service. One way of introducing auto-enrollment as a service is to offer a free AE consultation with clients. This consultation allows you to explain the various administrative aspects of AE along with your pricing structure to your existing clients and potentially gain new clients. The three main advantages of this consultation approach are: the client will begin to understand how much is involved in AE. The client will be much more receptive to your fee quotation. The consultation approach will hopefully eliminate your client seeking AE advice from you for free. The most important factor in setting the pricing strategy is to make sure that it allows you to be profitable. While there is no magical formula to achieve this, we're now going to look at three pricing strategies that are both practical and realistic. The first approach we will look at is a tiered pricing structure. Next, we will discuss using a monthly retainer fee. And finally, we will look at a price list strategy. So first is a tiered pricing strategy. A tiered strategy is where a bureau can provide AE services at different price points for different levels of service. A very simple example of a tiered structure would be shipping costs, where a customer has the option to pay for items to be delivered in 1 to 2 days, 5 to 7 days, or 7 to 14 days at different price points. The tiered strategy method clearly outlines the value and price differences between different levels of service, so it can make sense to both the bureau and their clients. This strategy means that clients can find a price point that will suit their budget. It is also possible to create various tiered packages with different price points depending on the number of employees your client has and whether there are different pay frequencies. Here is an example of a tiered pricing strategy for a client that has 10 employees. These prices are in addition to normal payroll charges. This example is not definitive and is of course open to amendment. This clearly outlines different packages that the client can choose from, being bronze, silver, gold and platinum. A good tiered strategy needs a structure that ensures no tier is too heavy or too light on the service offerings. If the option to upgrade is simple and straightforward, clients will be more inclined to upgrade. By introducing a tiered pricing system, this will enable the employer to decide how much of the auto-enrollment process they want to do themselves. If you are already doing their payroll for them, it is unlikely that they will want any part of the AE process and will prefer to leave it all to you. Next is a monthly retainer fee, which is an agreed amount to be paid on a monthly basis for completion of an agreed set of tasks. Typically, it is a contract for which the client will pay for the required AE services. Some bureaus have decided to simply increase the monthly charge for processing the payroll plus auto-enrollment. Rather than charging a high price for auto-enrollment setup initially, a monthly payment will spread the cost of auto-enrollment over a period of time. By charging per month, a bureau can also include the continuing AE tasks such as ongoing employee assessment each pay period and submission of files to the pension provider. A retainer approach is an opportunity to calculate how much revenue will be made from a particular client each month, allowing for a consistent revenue stream. This pricing strategy will allow for an incremental increase in income as each client reaches their staging date. This will appeal to clients as it guarantees that the Bureau will carry out specific AE tasks on their behalf each month in a manageable way. The client will understand from the outset what the payroll and AE costs will be, permitting them to budget accordingly. The time associated with ongoing AE tasks should be minimal each month due to software automation of AE duties. The processing time is further reduced with the introduction of integrated or API services between payroll and pension providers. Finally, bureaus could use a price list strategy. A price list or menu is a simple way to present a list of services. It is another way to break down each AE process into bite-sized pieces for your clients. Some bureaus may decide that they only want to handle the AE tasks that are seamlessly handled by their payroll software. A price list approach will demonstrate exactly what the bureau is offering as a chargeable service. Cost itemization is useful in justifying the price charge for AE. If clients see that an activity-based costing structure is being used, they can begin to understand each component of the process. It will be important to complete some price comparisons and establish the reasons for the variation in prices for different services. For the client, the advantage of a price list structure allows them to measure progress of the project. Listing each of the auto-enrollment tasks on a price list will simplify the client's understanding of the AE services offered and make it easier for them to make their selection. The three pricing strategies outlined are what the marketing experts suggest. This is not just based on a theoretical knowledge, but is largely influenced by gathering information from accountants who have gone through the process. My own feeling is that a lot of bureaus will apply various combinations of 2 or 3 of these strategies. In discussions with clients, they will probably outline the prices and options in a similar way to the tiered approach. Once the client has decided on hopefully the platinum plan, then to help the client's cash flow, the bureau may offer to spread the charge over 12 months, adding this new monthly amount to the existing monthly payroll charge. This total monthly charge would then possibly be reviewable after 12 months. A reduction may be appropriate as the initial setup costs will have already been covered. Another approach would be to use the tiered approach to demonstrate the maximum amounts chargeable and then to charge the client based on time spent on the various tasks, which I guess is the way most firms work. So this is a somewhat watered down version of the price list strategy, but may fit better with the way a lot of firms operate. And it'll be interesting to hear Steve's presentation because he'll be able to add a lot more sense to this discussion, I think. So we'll now have a look at various tips to increase profits from auto-enrollment. Step 1 is to engage with your clients and let them know that you are open for auto-enrollment business. The first thing to do is to find out your client's staging date in order to start planning accordingly. You need to be proactive and notify these clients that you are open for AE business and what services you are offering. You can find out your client's staging date on the pension regulator's website or by using BrightPay's integration tool. The way in which you communicate with clients about your AE services will play a big part of your success strategy. Early and clear communication is key to successfully increasing prices. Your customers will take the news a lot more graciously compared with suddenly springing it on them. It is natural for clients to be cautious when they are told that the prices are increasing. However, you must be confident in outlining the additional work and expertise required to process automatic enrolment. By explaining your price increase and justifying the benefits for your client, you will naturally be more successful. Clients will accept the change if they understand the reasoning behind the price increase. You could meet with the client and outline exactly what is involved in auto-enrollment and let them choose how much work and responsibility they want to take on. You should set out clearly the respective responsibilities of you and your client. For example, it is important to point out that the client is responsible for keeping correct records of staff earnings and age and for making payments of pension contributions on time. It is also important to convey to the client the benefits of them outsourcing AE tasks to you. If you take the opportunity to inform clients about the added value, they are more likely to remember and understand your service offering. So time, there will be significant time savings for your payroll clients. By outsourcing AE to a payroll professional, your client can avoid investing huge amounts of time researching how to comply with AE. The implementation of AE could also be very time-consuming if your client doesn't have the correct technology or software in place to automate a lot of the AE admin tasks. Time is money, as the saying goes. Without your help, your payroll clients might choose payroll software that doesn't have AE functionality. Even if it does, some payroll providers are charging an additional charge for AE functionality and a further charge to support your clients through the process. With a bureau, your client can avoid costly mistakes and save time that otherwise would have been taken out of their normal working week. The focus on core areas, especially for small and micro employers, their time is extremely precious. Time away from their business is money. Outsourcing AE to a payroll professional frees up their energies and enables them to focus on the core areas of running their business. Expertise. Implementing AE may require skills that staff of the client do not possess. Outsourcing will provide a level of continuity to the company while reducing the risk of possible non-compliance. Once you have reached verbal agreement with your client, you should specify in a letter of engagement that any advice to an employer is provided to them in their capacity as an employer and not as an individual. One possible approach, instead of issuing a full-blown revised letter of engagement, which would cover all of your services, is to send a client engagement clarification letter. This is a letter that will remind them that they will soon have to comply with the new auto-enrollment regime, explain that since it is something new, it is not covered by the scope of the current engagement letter. It will state that you have a professional responsibility to ensure that there is complete clarity over what is and is not included within the scope of the engagement. Set out how you can help them with auto-enrollment if they want you to extend your engagement and your fees for doing so. The letter should also set out clearly the respective responsibilities of you and your client. For example, it is important to point out that the client is responsible for keeping correct records of staff earnings and age and for making payments of pension contributions on time. It should also cover how penalties and charges might arise and how these can be avoided, for example, by specifying time limits within which your client must provide you with information. The full extent of auto-enrollment services extends to 5 pages in the letter proposed by the Institute of Certified Accountants, which is designed for those accountants already providing a payroll bureau service. And you can view the sample letter of engagement in the handout section on your control panel. A useful feature that you can use when communicating with clients is the pre-assessment tool in BrightPay. Essentially, this will give you an estimated snapshot of what auto-enrollment will look like when the client stages. To access this tool, you just need to click on the assessment report within the pension section in BrightPay. The assessment preview will give you a breakdown of each employee's worker category, along with their pensionable earnings, their qualifying earnings in the pay period, and the employee and employer contribution amounts. So this is a useful document to send to clients in advance of their staging date so that they can understand how much auto-enrollment might cost them and allow them to plan accordingly. Also in that initial meeting we're talking about as well, the free assessment, the free review, if you bring that report along with you, it would also give a good starting point for the discussions. The next step is to ensure AE functionality. Having payroll software with comprehensive auto-enrollment functionality will play a vital role in ensuring the success of auto-enrollment. Without the appropriate systems, bureaus will need additional time and resources to cope with AE. So ensure that your chosen payroll software provider will provide all the necessary functions to automate the employer admin tasks. The regulator urges bureaus and employers to check with their payroll provider to ensure that it will correctly identify the duty you have for each employee and to see if the system will support the requirements of AE. So the best way to demonstrate how BrightPay or indeed any other suitable payroll software can help you with offering auto-enrollment as a service is by showing you how software should work. So I would now like to hand you over to Vicky, who is our UK support manager here at BrightPay, for a quick demo showing you just how easy auto-enrollment can be. In this example, we are assuming that the employer, or you on their behalf, has already registered with a pension provider, and in this case we're using Nest as the example. So thank you, Vicky.
Thanks, Paul. So good morning, everybody. Just bear with me there, just while we do a quick changeover. Okay, so just here on screen, just showing you the payroll screen in BrightPay, and just in the example this morning, we are currently in month ending the 31st of May, and we're going to assume in the example today that the employer's staging date is the 1st of May 2016, and postponement is not being used. Okay, so as soon as you reach your staging date in BrightPay, the software will actually assess your employees for you and will automatically determine whether your employees are eligible job holders, non-eligible job holders, or entitled workers. And you'll see these on-screen flags and yellow alerts appear to inform you of how each employee has been assessed. So you'll see here our first employee on screen. She is being assessed as an eligible job holder, and if we click on View Options, this will bring you through to the various actions available for that worker category, so to enrol the employee, to postpone or mark as exempt. So if we are to enrol the employee, we'll simply click on the Enrol button, select the appropriate enrolment date, and then the applicable pension scheme. So as Paul has just mentioned, we'll just use Nest in our example this morning. Select your pension scheme and then the applicable tax relief that is relevant to the pension scheme in question. So one of the useful features in BrightPay is the ability to batch process employees. So if you have a number of employees to enrol and they all have the same settings as those selected, you can simply click on Enrol Multiple Employees with these settings, select the employees that you wish to enrol and enrol them all at the same time. BrightPay will also take care of your communications that you are obliged to give to your employees. So BrightPay will automatically produce your enrolment letters for you once you have enrolled employees, and we simply click on Letter here. Okay, and enrolment letters, they can be printed, they can be exported to PDF, or they can be emailed directly from the software directly to the employee. Again, to speed things up for you, you can batch process the letters as well, simply by clicking on the option to create send letter for multiple employees. If you're going to print or export the letters, basically the user is given control then over paper size, margins, etc. And if we just do a print preview of an enrolment letter here, so the enrolment letters in BrightPay, they are the 2015 pensions regulated standard templates that we're using, and the enrolment letters are going to include details about the employee's staging date, what their contribution rates are for the employee, how the employee can opt out, and also just some general information about automatic enrolment and what it will mean for the employee there. Okay. Then once your employees are in receipt of their enrolment letters, you can simply tell BrightPay that that has been done, and again that can be done in a batch. And then when you return to the payroll screen for any employee that you have enrolled, you'll then see their pension deductions flowing through to their payslip thereon. Our next employee is being assessed as a non-eligible job holder this time. And again, if we click on View Options, this will bring you through to the various actions available for this worker category. So as an employer, you are obliged to inform both non-eligible job holders and entitled workers of their right to opt in or join the pension scheme. Then should the employee choose to opt in, you have that option here, and also to postpone and mark as exempt again. Okay, so you would simply click on Letter here to create the opt-in letter, and again these can all be printed, exported to PDF or emailed, and again they can be done in a batch. and marked as done when complete. So for any employee that has been enrolled or has joined or opted in, as soon as you finalise their payslips, each employee's payslip will then give you detail of the employee contribution going through and also any employer contribution as well. So BrightPay currently supports 16 pension providers, and where we do offer dedicated support, that basically means that BrightPay can actually produce your contribution files and, where applicable, your enrolment files for upload into your pension provider's web portal. For Nest and also for Smart Pension, there is an API option, and that basically means that you can submit your files directly from BrightPay into those two pension providers, a bit like an RTI submission, that they go directly from the software. So there's no need to save a file and upload it separately. So just to show you then how this works with Nest, the API option. Okay, so within the pensions utility in the software, under Edit Details and Groups, just make sure that you select Nest Web Service as your submission method and enter your username and password. In this example, that would be what you use to log into your Nest account. Okay, Nest require an enrolment file to be submitted first of all before you pop through your contributions files. So basically, to submit an enrolment file to Nest, simply select the enrolment summary on the menu bar, followed by Send Enrolment Submission. Okay, this is going to guide you through 3 steps. So it's step 1, select the employees to include in the enrolment file. Click Next. Step 2, complete any additional information required for payment source information, for example. And when complete, click Next. And at step 3, you're simply clicking Send Now to submit your enrolment file to Nest. Okay, and in a short time, you'll get a response back just to let you know that it's been successfully received. A contributions file is submitted in very much the same way. So once you have your enrolment file submitted to Nest, your contributions file is done by this time clicking on Contribution Summary and then clicking on Send Submission. On the first screen, just complete your payment information. So when your submission is for, what your payment source is and what your payment due date is. Click on Next. Step 2, select the employees to include. At step 3, you just need to say why there could be possibly a reason for partial or non-payment of contributions. So for example, an employee may have left the employment, so you need to instruct Nest that they, to no longer expect contributions from them. And at step 4, you're simply clicking on Send Now to submit your contributions file to the pension provider. And that's something you'll repeat then every pay period thereon with the contributions file submission. Okay, Paul just touched on this briefly, but just to show you again the assessment report in BrightPay. So this will allow you to do both a pre-assessment, so basically a pre-staging assessment of your employees, and also a post-staging assessment. It's accessed in the pensions utility under the assessment report here. So here we have the pre-assessment here, so prior to staging, if you just want to get a snapshot of what auto-enrollment might look like for you, and as Paul mentioned, just to get an idea of estimated costs, for example.
I suppose the other thing, Vicky, as well, it also gives you an indication whether you actually need to choose a pension scheme, because the advice from the pensions regulator is that if you don't have any eligible job holders, you don't actually have to have a pension scheme chosen before staging. So again, that report will highlight that.
Exactly. So under the assessment column here, you'll be able to see how they are likely to be assessed. Yeah. The same document as well also kind of includes a general advice sheet, really. So again, it's a useful document just to send on to clients. It's just giving general information about the different categories of work and what the qualifying earnings are, etc. That is available. Then after staging, you can also access the assessment report again. This is just going to give you an overview of what happened at staging for you. Okay, so what employee stage assessment date was and how they were assessed. This will be a useful report just to access, just to help you with your declaration of compliance, which is due to be done 5 months after staging in that time frame. Okay, so I'll just pass you back to Paul.
Okay, thank you, Vicky. Another thing about the declaration of compliance, just while you mention it, the pensions regulator is working on an API for submission of the declaration of compliance, and once they have that, we will hopefully get that into our software as soon as possible, because it's actually quite a big responsibility. The declaration of compliance, and it's one of those things just to remind you not to forget about. Because sometimes the client or the accountant could be confused as to who actually is responsible for it. So again, it's one of those things, I suppose, for the letter of engagement. So before I pass you over to Steve, I would like to impart just some tips that we've gleaned on the front line of AE, so to speak. Firstly, engage with clients well in advance of the staging date. So you can use the TPR website to find out staging dates. Don't let a client forget about staging. Consequences are costly and extremely inconvenient. For example, if they're more than 3 months late, the employer has to pay the employee contributions. If you are postponing any employees, make sure to communicate within 6 weeks. And apparently some employers believe that if they choose to postpone all employees, say for 3 months after their staging date, then nothing needs to be done in that 3-month period. This is not the case, as all employees must receive communications within 6 weeks of the staging date relating to the postponement and explaining when they will be reassessed. If this communication is not issued, then the postponement effectively never happened, and enrolment must be completed retrospectively back to the staging date, which will be a nightmare. Next one is agree who is to do the declaration of compliance. If you're not offering this as a service, make it perfectly clear. Don't allow your client to forget to complete the declaration of compliance and therefore receive a fine. This is an area where the pensions regulator has issued the largest number of fines to date. That penalty is £400 for something that should just take 10 to 15 minutes. Okay, after you, Karen.
Okay, I'm just going to pass it over to Steve. So Steve, if you want to get your camera ready. And we'll just...
Indeed. Our microphone now on.
Great. Yeah, so as I mentioned earlier on, Steve is primarily going to be conducting his presentation on his camera. So there's a line between your camera screen of Steve and the PowerPoint. So if you want to make it any bigger, you can just simply drop it over, or there's a little arrow there that says enlarge as well, if you want to see Steve full screen.
Actually, as it turns out, Karen, as I've been listening to Paul, I've made a few little changes and tweaks, and so I will probably use the screen a little bit more. But I presume you can now, everybody can now see me, hear me, and also can see my screen. Is that the case, Karen?
Yep.
Fantastic. Okay, well, thank you so much for having me. My goodness, seriously impressive software that we've just seen there that takes away a huge amount of the burden and creates a massive opportunity for the profession, doesn't it? And actually, it's the same, I think, around pricing. The way that accountants currently price simply doesn't work. There's a major study done by my friend Mark Wickersham in conjunction with AVN just over a year ago, back end of 2014, so it's a year and a half old now. 725 UK accounting practices shared their pricing data, shared their pricing approach, shared their pricing successes, and staggeringly, as you can see on the screen, only 11% of UK accountants say that the prices that they charge, this is not for AE specifically, this is for their services as a whole, and indeed my whole next 20 minutes or so is talking about the way accountants price as a whole. Staggeringly, only 11% said that the way that they charge gives them a good level of profitability. Fully 89% of accountants say basically the way we are pricing doesn't work for us. Now that's absolutely crazy, isn't it? It's bizarre, and yet it is the reality for so many people. And the reality is for so many accountants that actually what we are doing is we are pricing too low. Now I know there's a market price that you can't charge more for. We'll come back and look at the evidence for that in a second. But actually the bottom line, I think, is this, is that most accountants are setting their prices too low. And when they set their prices too low, and if you fall into this same trap, this applies to you, when you set your prices too low, it forces you to compromise one of three things, and very often all three of these things. Firstly, if your prices are too low, you have to compromise your income. You settle for earning less money. That's one compromise that many accountants actually make. Or when your prices are too low, because you don't earn enough money in a regular 40-hour week, you compromise your work-life balance by working an 80-hour week instead to make up for the fact you can't earn enough money in a 40-hour week. Again, because your prices are too low. Or the third compromise that accountants make is because they can't earn enough profit doing a really thorough, comprehensive job at the low prices they charge. They cut all the corners that are possible. They strip the service down to its bare minimum to do the bare minimum for a client in order to just make ends meet on that with those low prices. So in other words, we compromise service quality. And low pricing inevitably leads to one or, in most cases, all three of those compromises. We're compromising our income, we're compromising our work-life balance, and we're compromising the service that we're able to deliver because the fee isn't large enough and therefore there isn't enough time to do everything that we know we could do to help a client, so instead we just do the bare minimum. Now, we recognize those things, don't we? I'm sure you recognize those things. But again, of course, accountants usually hide behind, yeah, but Steve, we can't increase our prices. It's just the way that it is. And that's a really interesting observation, and I think it's one of the excuses, it's one of the beliefs that the profession holds which really, really messes things up for them. So if we go back to this research study, 725 UK accountants, if I just give you a sense of, it doesn't matter what the particular graphs are, but you can probably see in there are some graphs down here. Those graphs are, we asked 725 UK accountants what they charge for particular services, and dozens of standard services. And what I've done on the screen here is I've averaged 10 of those core services from this report, and I've indexed them so that you can see the huge variety of price that there is. In other words, so for every service where the average firm charges £100, basically I've indexed it to £100, you can see that the bottom quartile, fully 25% of the whole profession, when the average firm is charging £100 for this service, the bottom quartile, the quartile that really don't understand how to price, are charging between £10 and £64 for the same thing. The next quartile up, the third quartile, the ones that are below average but not the very worst, they're charging £64 to £100 for the same thing that the average firm is able to charge £100. But then look at what happens towards the top of the scale. The quartiles that actually understand pricing are able to charge the second quartile 100 to 167 quid, and the top quartile £167 plus. Now ignore the £1,600 there. That is the average of the highest prices that accountants serve. But even if we take out the £1,600, even if we take out the £10 at the bottom, those are the two extremes, what we have is this huge variety. We have those firms that don't understand pricing typically earning something along in the circle sort of 64 quid there, and those firms that do understand pricing typically earning 167. That's almost 3 times as much for the same thing. And it's really interesting when Paul was talking about before, he said that, and I've taken the quote, prices vary drastically. He was talking about the prices that accountants are charging for AE. What I've got on here are 10 other services, tax returns, VAT returns, all sorts of compliance and core services that each and every one of you on the webinar today delivers. And the question is, where are you in that league table that you can see on the screen there? Because where you choose to be in there, and it is a choice, fundamentally affects everything. If we had a genuine market price, if there was a market price that you couldn't charge more than, then this data analysis of the prices that accountants charge would show that each of those quartiles was charging almost exactly £100. It would be impossible, wouldn't it, to charge more than 100 quid? But you can see from the evidence here, fully 25% of the profession charges between 100 and 167 pounds, the second quartile, and fully 25% of the profession is able to charge more than 167 pounds for the same thing that the average firm charges £100. Clearly there isn't a market price. If there was, there'd be no variation here. There isn't a market price, there is just your price. And the quality of the choices you make over the prices you charge will determine the quality of the compromises that you're forced to make, go back to our idea before, but also the quality of everything in your practice. It will determine the quality of your income, yes, for sure, your work-life balance, the clients that you're able to win, the reputation that you're able to build, because of the service that you're able to deliver. If your price is 10 to 64 pounds for something that someone else is able to charge 167 pounds or more, then the 167 pounds or more firm can do a better job. There's more time in the budget if you think of it that way. You can't possibly at 10, 20, 30, 40 pounds do a brilliant job. So your reputation suffers because client service suffers, and consequently so does what suffers is the kind of clients that you attract in the marketplace. You get more of those clients who just want you to charge 10 to 64 quid for that minimal service. They're not interested in the great stuff that you can do, and consequently you get trapped at the bottom because you price at the bottom. But it doesn't have to be that way. If we look at all the pricing research, all the insights from my 20 years or so working with accountants and all the researching and reports like this and elsewhere, there are 7 guiding principles. Firstly, there is no such thing as market price. If there was, not a single one of these graphs would look as they do. Every graph has huge variation, as you can see. Every graph has huge variation. There is no single market price. There is just the price that you choose. So start making better pricing choices will be my #1 tip. The second guiding principle is the way that you price has to be fair to you. If only 11% of accountants are making a decent living or earning decent profits from the way they price, then the way they price isn't fair to them, and you have to change it. Thirdly, it of course has to be fair to your client. That does not mean, though, the lowest price. It means a price that reflects the value in some way, shape or form, their assessment of the value, a price that they're happy to pay because they feel that what they're getting is exactly what they need. And we'll look at how you can structure things and how you can put these guiding principles into effect. Fourth key principle is that the prices that you charge, the way in which your prices are calculated, need to be transparent. They need to be fair, simple and clear so that you understand them and the client understands them. Crucially, they need also to be leverageable. If the prices you charge depend on, let's say you take the approach that a lot of accountants have moved to over recent years, which is fixed price. The partner sits down with a prospect and looks the client in the eye and says, £3,000, has a discussion, a negotiation, use their skill in some way live in the meeting to pick a fixed price. What we know about that fixed price is, well, we'll come back to the fact that it's always wrong, but the point is it's dependent on the partner who's got the skill, apparently, allegedly, I'm not sure they have, but allegedly the partner has the skill to have that conversation. But what if the partner's not there? What if the partner's on holiday for 2 or 3 weeks? Practices are frozen, are sort of paralyzed because they can't price effectively during that interregnum. So what you need is a pricing approach which is leverageable, that doesn't depend on the partner being there, the partner doing it. And you also need a pricing approach. The 7th guiding principle is a pricing approach which is depersonalized, that doesn't depend on how you feel. Every member of your team should come up with the same price, and they should come up with the same price in the same situation, that is, in the same client conversation, regardless of whether they are flying high and feeling great that day, or they are, they've had a terrible day and their self-esteem and their mood is awful. Now, at the moment that a lot of the pricing conversations that we have with clients are hugely influenced by our emotional state. If we're flying high and had a great day, we're bullish and we quote a higher price. If we've had a tough day, other clients have been complaining about their price and their work, and deadlines have been missed and a team member's just resigned, what price do you quote? Usually a lower price, because our state of mind affects the price. We need to depersonalize. We need to strip out all of that stuff from what happens in pricing because it's not at all helpful. That's why only 11% of accountants say that their prices give them a good level of profitability. So the profession has sort of historically used time-based billing, hasn't it? Now, we know for a fact time-based billing does not work. It doesn't work for accountants because only 11% of accountants are getting and making a decent living, and most of those are not doing time-based billing. But it categorically doesn't work for clients. A few years ago, Sage did a major research study, and they asked thousands of UK owner-managed businesses, what is it? A number of questions, but the one I'm interested in here is, what is it you dislike most about the way that your accountant operates with you? And the answer was surprise bills. What we hate most about what our accountants does is a bill after the event that either we didn't know was coming or we didn't know how big it was going to be. That's a surprise bill. That's what clients really, really hate. And yet, what's time-based billing? It's always a surprise. You can't calculate the magnitude of the bill until after you've done the work. And therefore, the client can't possibly know how many hours and therefore how many pounds it's going to be until after you've done the work. Time-based billing is always a surprise. It's the #1 things that client hates. So we've got to move away from time-based billing. So a lot of the profession has moved to fixed price billing. This sort of look the client in the eye work out, from looking at last year's accounts and just from assessing their situation, how much you think you can get away with, and quoting a price. £3,000. Now, what do we know about any price, whether it's £3,000 or £300 that we pick as a fixed price? It's never right. It's always either too high or too low. And as Paul said before, if it's too low, then we leave money on the table. They would have paid us more, but we haven't given the opportunity to. And if it's too high, they walk away. Either way, we leave money on the table, they haven't paid us as much, or they walk away. We lose. Fixed price billing isn't fair to us because we lose as the practitioners. So we have to move away from time-based billing. We have to move away from fixed price billing. So the question then is, what actually works? And in exactly the same way that, as Paul showed you before, when you are empowered by technology to do, by great technology to do the AE work, it's so much easier. It's leveraged, it's depersonalized, it's fair to everybody, it's efficient, it's slick, it's profitable. It's exactly the same when you use technology to price. And that's what my suggestion to you would be, is that you start using technology to price, and that you use a pricing approach which I would call iterative digital pricing. And let me give you I would, number one, where you can directly link the value of the work you're doing to the price, then do that. So for example, if you're saving the client 100 grand in tax, a lot of accountants very successfully charge 25% of the tax saving. That's an example of a value-based fee. But most of the time, we can't put our finger on and our hand on our heart and say there's going to be 100 grand saving or benefit to you. So that kind of direct percentage-based value-based pricing is very difficult. And in those situations, that's when I would use iterative digital pricing. So let me just toggle across and very briefly show you what I mean by that. And hopefully now you can see my screen. I'm going to go for 5 minutes, no more than 5 minutes, maybe even 3 or 4 minutes, into a tiny role play, so you can start to see how the pricing conversation with a prospect can be very different, much more successful. And these are the kinds of conversations that accountants are having that are getting prices that really make profits for them. So firstly, I would start off with my prospect. Now, I'm now going to be the accountant. I'm going to be talking to a prospect called Dave. Dave, we took a long, hard look at the way that the accounting professionals traditionally charge based on time, and we know that clients hate the fact that the slower you take, the longer you go, the more I have to pay. That doesn't seem fair. So what we've done is we've co-funded some technology which is used by hundreds of accountants with thousands of their clients to bring openness, transparency and fairness to the pricing conversation. Now you sit on the same side of the table with the client and you look at the screen together, and the computer will calculate the price, and therefore it's not your fault. You are working in this, the pricing becomes a collaborative process rather than a competitive process. At the moment you sit on one side of the table, you say one figure and they try to beat you down. That's a competitive process. But you sit around a screen together answering a couple of questions in a collaborative process way, and you get much, much better results. So I just need to ask you one or two, so I'm now back in role play, I just need to ask you 1 or 2 questions. In fact, Dave, if you want, you can take the mouse and you can put your own data into the software. It will calculate a price for us. And notice that kind of inclusive, collaborative language. It will calculate a price for us, you and me together. So the first question, Dave, is what kind of business do you sell to other businesses, or do you sell to consumers? Let's say he's a business to business. And I've already put in the fact that he's a limited company that's in print in his year, and just to save a bit of time in this demo. Second question then, Dave, is what type of accounting system do you have? If you're lucky, he'll know. Let's say he's got a manual accounting system, and then you say, well, how good is your accounting system? They'll always say excellent, won't they, even if they don't really know. So what you actually need is a system for bringing clarity over what an excellent manual system records looks like. So I'm going to open up the accounts rating chart here, and I would be able to explain to Dave, okay, to have an excellent manual accounts, you need all those ticks there, which is an analysed cash book, fully crossed cars, bank accounts reconciled, day books, control accounts, VAT control accounts, petty cash control accounts, all reconciled. He's glazed over. He's no idea what you're talking about. Let's say he said, well, actually, I've got the cash book and I add up the columns. Okay, so it's an analysed cash book. It's cross-cast. So you've got 2 ticks. So let's go back into the software then. So that's 2 ticks means that it's a manual system that's poor. That's not us making a judgment. That's just a statement of fact. The more you do, the more of those ticks you have, Dave, the better the quality of the input into our production line, the less work we have to do to create a compliant set of accounts, and therefore we can pass that on to you in terms of a lower fee. But at the moment we have to do much more of the work because your system is manual and it's poor. Only one or two other little questions that I now need to ask you, Dave, before the software will calculate a price. The next one is, how big is your business? Okay, so you're turning over 720 grand. We're in that range now, and we're almost there. Just one more question really, which is, would you like our 3, 4 or our 5-star service? Now this is the first question when instead of waiting for them to answer, you would jump in and say, let me show you what your investment would be, and you very specifically describe it as an investment if you went for the 5-star service. And on the screen it's instantly calculated, 771 quid a month for 10 months. This is a 7.5 grand fee. One of two things happens when you do that. Either they fall off the back of their chair, which sometimes will happen because this is a big fee. Let's go the other end of the spectrum. The other option, the other binary choice is they say, okay, great. In which case, you're just sold a 7.5 grand fee. This is brilliant. Now, more often they're going to say, that's really expensive. That's way more than I'm paying at the moment. You can then show them digitally exactly what they'll get for that fee. So you have a summary of all that's included within that 5-star package, and you're able then to explain that to them. If that's too rich for them, you can say, okay, well, one of the things we can of course do is we can go down to the 4-star service. Now that's brought the figure, the investment down to 697. What would I get for the 4-star service? You can show them what they would get within this particular bundle, and it also lists the things that they don't get, so they know for clarity that they don't get these certain things. And that often means that what they'll say to you is, okay, can we look back at the 5-star again? And if that's still too rich for them, you can show them the 3-star bundle. Now, being really clear here, what's happening is that you are, rather than giving them a single fixed price, which would be too high or too low, we've already had 3 different prices on the screen, but they are for 3 different bundles. This is, in Paul's language before, his tiered pricing strategy, but here we're looking at this across, the core accounts service. We can narrow this down. We can use this exact technology for pricing AE if we want. What I'm able to do here, though, is show you how, using technology to price, you can come up with so many more iterative prices, so many different price combinations during the conversation. And if, for example, so we can say, if he still says that's really rich, well, okay, if we instead were to move you into a manual system, and that was a computerized system that was very good, then your investment would come down to 242 quid for the 3-star service, or at the 5-star level, it would just be 432. And you might well accept that price, and you'd explain that to get you to a very good computerized set of records, we'd need to do some one-off training and put the system in. You can quote them a fixed fee for that one-off activity and so on. So when you get to the level where he says, okay, that looks interesting, you then, for clarity, you go through the other bits, the other parts of the engagement. So he's over the VAT threshold. Someone's going to do your VAT return, Dave. Would you like us to, or are you going to? You have this specific conversation. If you said, well, how much would it be for you to? Well, for quarterly VAT returns, that would factor in, that would change the price to 4 times 512. If he doesn't want you to do the VAT returns, you can simply take them back out. You can add them in, take them out at any time. Similarly with self-assessment tax returns, bookkeeping, other aspects of tax planning, cash flow forecast, management accounts. Let's say, do you want us to do quarterly management accounts for you? Okay, well, there's the price now at the bottom of the screen. The price is continually being changing, so this mixes up the 3 kinds of approaches that Paul talked about before. Yes, you've got the tiered pricing strategy because you've got the 3, 4 and 5-star service. Yes, you've got a price list. You can see the price list unfolding on the screen. But yes, you're also billing that work as a monthly investment, so allowing them to spread it more like a retainer for that mixed package of services. So we can go through all of the optional extras, bringing clarity, because if they don't say yes to something, it's not included within the scope of the engagement. And therefore, that's the conversation you have. At the end of this process, you know exactly, let's say they're happy with that combination of things, you know exactly what's included within the engagement. You can create a proposal at the push of a button for that exact price. And there is complete clarity. There is no confusion whatsoever as to what is and isn't included within the scope of the engagement. Whereas most other conversations around pricing, one, we don't go through anywhere near as many iterations, and therefore the price is either too high or too low, and we lose out both ways. So then it's created that my Dropbox is also backing up on my other computer, so my internet connection's slow. There it is. It's pulled in all of that data, all of the specific elements of that particular package. We can now email it to them. They can even sign it on the screen. That's how that approach to pricing, that iterative digital approach, is what really works. It brings in all of the insights from all of the research and allows you to transform the way you price, because you typically end up with much, much higher prices agreed to that process. It complies with all of the guiding principles because it recognizes there is no such thing as a single market price. It's an approach that's fair to you because you get much higher prices that are profitable. It's fair to them because they're in control. It's transparent, it's simple and clear, it's done on the screen, it's leverageable, it's not dependent on any individual partner, it's depersonalized, it's not affected by whether you're in a good mood or not. It works on all of those levels. It works brilliantly well. So that's the approach to pricing. That's what the research shows works extraordinarily well. Now I have to pass back to Paul and Karen in 30 seconds. But if you're the partner director or owner of an accounting practice and you email me on my address, then steve@stevepipe.com, I will send you a whole host of free training, research and resources around this and other aspects of improving your practice as a thank you for your attention today. But I think I've used up my allotted time. So Karen, Paul, back to you guys.
Thanks so much, Steve. Just give us a few minutes now. We're just going to set up for the questions and answers.
Actually, before we get to that, Steve, can I ask you a question?
Of course.
That software you were showing there,
yeah.
Where can the accountant get that software?
Well, that's actually created by ABN, so it's an ABN piece of software, and anybody who wants to find out more about that, email me at stevepipe.com, steve@stevepipe.com, the screen that was up there before. Then I'll give you details of that for sure. Yeah. Yeah, it can actually also, of course, be used. I showed you how to use it to price the core accounting services and other things around that. There were buttons in there for pricing payroll, and you can easily adapt it in any way. It's completely user definable. So it's not saying this is a prescriptive set of prices, but it's a methodology that can be flexed to the needs of any given firm. So it can be flexed for AE services, it can be flexed for language, it can be flexed for price levels. But it means that rather than confronting your clients with a single price, you bring in all three of your pricing principles into one place. And in the same way that your technology makes AE so much easier and more profitable, that kind of technology makes pricing so much more profitable and simpler.
Yeah, I can tell from having been in the practice in practice in the distant past, I can tell that would have made a huge difference to my own.
Anybody who wants to use that software, again, contact me at steve@stevepipe.com. We run training courses. We do all sorts of stuff around that because pricing is this mission critical jugular subject.
Okay, thank you.
Yeah, thanks so much for that, Steve. That was really good. And I suppose just going back to your presentation, it really does put the decision into the client's hands. So they decide what they want to pay for, and they decide,
It doesn't, but the client's choosing between a whole raft of iterative options, every one of which is profitable and acceptable to the firm. It's like going into Marks and Spencer's. It doesn't matter which combination of things you take off the shelves and put it into the basket. When you go to the checkout, M&S is happy because all of those price combinations work for them. Whereas if they just had one product in there at £3,000 or £3, who would shop there? People have different needs. The baskets that we go through checkouts, whether that's at an M&S checkout or an accounting firm's checkout, are going to be very different from client to client based on their circumstances, their budget, their ability, their vision, and all of that stuff. And if we don't factor that into the way that we price, and this is exactly the same with AE. One of the points I was going to add, Paul, around pricing on AE is that AE is something which has to be done. It's not terribly easy for clients to shop around. They have an established relationship with their accountant or payroll provider, and you do not have to price that at stupidly low. You yourself said that you'd seen this huge variation in prices. So people have just made different pricing choices. Why on earth would any accountant make a low pricing choice over a service which is compulsory? They have to do it. And there are serious penalties for not doing it. So this is a unique opportunity for accountants to revisit the way they price and start doing it with AE, but with everything else as well, so much more profitably, so much more successfully.
Yeah, no, absolutely. It's a real opportunity to make more money. And if what you were talking about, if you have a manual system in place, obviously it's going to take the accountant a terrible amount of time. But if you have an automated system in place, and that's one thing that we talk about all the time,
Yeah.
once you have the correct tools in place, and going back as well to what you're saying, Steve, is it takes you less time and you'll make more money. So if you have the right tools in place, less time, more money,
Yeah, no,
makes sense.
this is the digital age and technologies around it. You know, the very fact that we're able, instead of the hundreds or so meeting at some physical venue and the sheer inconvenience and hassle of that, the hundreds have been able to do this together online without, you know, even leaving our desk. And exactly, technology is transformational, and it's transformational in every other respect. It's transformational around delivering the service, your type of technology. It's transformational around pricing the service and therefore earning a decent living, our kind of technology.
Yeah, it definitely, I think, comes back to having confidence in terms of what, you know, you're selling your expertise as well. So, you know, payroll bureaus and accountants really need to have a confidence that this is a service that they're offering. They're taking a task away from their clients, and then the clients don't really understand what automatic enrolment is. So it is really a unique opportunity, and I think both presentations really covered, you know, different elements that you know, you can set out your pricing and explain it. I suppose communication is going to be key for accountants communicating with their clients in terms of increasing their revenue.
Yeah, and it absolutely is. And one of the points that you made before, right at the beginning, I think it was you, Paul, you said, you know, sometimes clients don't like it when you increase your prices. The great thing about AE is that it doesn't involve increasing the prices. This is a new service. This is something which categorically cannot be part of the existing engagement because it didn't used to exist. And therefore it's something completely new. It's on top of, it's additional, and therefore it has to be priced separately. And so there is the client cannot possibly think, as long as we explain it properly, that we are just increasing the prices. We are doing something new for which there is a new price. Mm-hmm. It's a different conversation. And once accountants start to get that, then, because I think the missing ingredient in most the reason that accountants price too low comes back actually, sadly, to self-confidence. Yeah. As a profession, we are not confident enough. We don't understand clearly enough the value that we bring, the difference that we can make, you know, in terms of bringing simplicity and bringing compliance and taking away hassle and stress and saving money and so on and so forth. We don't understand that properly, and because of that, we're always apologetic and we're always sort of lacking in self-confidence. But this is something which we can make a huge difference around, and we should stand tall and we should price accordingly.
Yeah, no, absolutely. Okay, so we're now going to take some questions and answers. So I'll just give it a couple of minutes for people just to type in any questions that they do have, and then I'll ask the questions to both Paul, Vicky, and Steve. Just while the questions are coming through there, I'll just finish up today's webinar. So there's links there that we'll send this PowerPoint on to everybody, so you can book a more in-depth demo. We have lots of guides there on how to communicate with your clients about automatic enrolment, how to increase revenue from automatic enrolment, and we have a number of automatic enrolment webinars coming up. Okay. So, okay. Sorry, can everybody hear me there?
Yeah, I can still hear you.
Sorry, I didn't know. Okay. So I think we did just cover this, Steve, but maybe you might just mention one or 2 points again. So how would you explain your increases in prices? So I know you just mentioned there that you're not increasing your prices, you're offering another service.
I think around AE, I would literally go to the client and explain that this is new legislation, a completely new set of responsibilities for you, the business owner, that are burdensome, and for whoever it is that's going to support you in complying with that. So unfortunately, this is the government's fault. I would use that kind of language. You know, that it's not either of our fault. This is a completely new set of obligations, of red tape, of compliance that's burdensome. So in which case it's brand new. So with AE, I would definitely, that's the kind of approach I would use, and I would blame the government.
Yeah.
Generally, the conversation, and so moving then on to my session about changing the way we price, I would sit down with my clients, and in fact, we've got lots of firms that have done this, lots of case study evidence, lots of research. Even where one of the firms that's changed the way it's priced has can trace its ancestry back almost 150 years to the early days of Ernst & Young. In fact, they've got a family tree in their reception. If you trace it back multiple generations, it goes right back to one of the predecessor firms of Ernst & Young. The point is, even in a long-established practice like that, and they had 6 or 7 partners, they had client relationships that had gone on for years and years and years, they were able to fundamentally change the way they priced because of the words that they used, because of the language that they used when they introduced that discussion. And they sat down with their clients and said, look, we've taken a look at the way we price, and we realized it isn't fair to anybody. It isn't fair to us, but it certainly isn't fair to our clients. One of the things we saw, for example, was that some of our clients were subsidized in others, and that isn't fair, is it? And so what we've done is we decided to bring transparency, openness, and clarity to the way that we price in this iterative digital way. So you can take the mouse, Dave, if you would like. You can pick your own price. It democratizes the pricing approach. And then they talk in terms of, when the price changes, they talk about that being an adjustment to the price rather than an increase. Now, I know it's just a different word to explain the same thing, but actually the words you use make a huge difference. Describing it as a price adjustment, justifying it on the basis that the old way of pricing wasn't fair to anybody, and indeed the research and many of our clients said that billing by the hour was just bizarre. I mean, the slower you take, the slower you go, the longer you take, the more you have to pay. That doesn't seem fair, does it? And then explaining that we're taking a lead for the profession. We're working with hundreds of other accountants. This is the way that they are pricing thousands of their clients' work, to bring openness, transparency, and fairness to the pricing process. And then you go into that pricing process on screen in this collaborative, not competitive way. That whole conversation and their receptiveness to it, and therefore the results you get at the end, fundamentally different.
I think just one of the points I want to make there as well is that a lot of comparisons sometimes are made between RTI and AE, and they're completely different. RTI was just simply a new process and maybe delivering the information to revenue a little bit quicker, whereas AE is a total new set of processes in the payroll that need to be basically complied with. So you're dead right. I mean, it's an additional service. It's not an increase in price. Mm-hmm. It's a new price for that extra service, really.
Yeah.
Okay. So this one here, I think it's for yourself, Paul. So the prices that you gave in your examples are there in addition to the payroll charges that you charge?
Yes, yeah, that's the kind of feedback we're seeing. Yeah, that they will be additional.
Okay. So another one here for you, Steve. I'm a bookkeeper running a payroll, bookkeeping, HR service, and now AE to a number of clients. Could your pricing software be tailored to my business needs, i.e. I'm not a standard accounting practice?
Yeah, I mean, it's designed for more conventional accounting practices and therefore copes with the huge variety of different services that accountants offer. You can trim it down, you can slim it down to a much narrower range of services if you like. So yes, it can cope with that. Our focus is on tends to be more on full service accounting firms, but you might want to look at it certainly and see whether it works for you. Yeah.
I think that the software is a great.
I showed. Sorry, Karen, I interrupted you. I apologise. Both the content in terms of how things are described and what services are included within it, and the prices put on those services. There are the ones that come straight out of the box, which is as I showed it to you, just so that people can hit the ground running and start using it within 30 seconds of having it. But also the whole thing is tailorable and can be adapted to the specific needs of the practice. So this is not prescriptive. This is not like a franchise where you have to charge certain prices. And it's just that the illustrative prices are in there because they work really well for other people.
Yeah. Yeah, I think the software, I suppose it puts it all there in front of you, so you can, if you make any changes, if you can take anything out and put anything in, rather than, I suppose, if you're just sitting there on a one-to-one basis with a client and they might think that you're just coming up with prices off the top of your head.
It will totally change it, because if they do think, if you sit down in front of them with this fixed price approach where historically the partner would look at the client in the eye and having looked at last year's accounts and come up with a figure, £3,000, even the inflection at the end of the voice, the £3,000, they know it's a question and they know the answer to that question is no, I'm going to start negotiating at this point. So, and they also know that you've just made it up. Mm-hmm. It's much like the price tag in an antique shop. You know, if you go into an antique shop, you know that's merely a suggestion for a discussion. Whereas when you go into Marks and Spencer's, the price tag in Marks and Spencer's is the price.
Mm-hmm.
You know, yes, you can change how much you spend by putting different things in your basket. When you get to the checkout in Marks and Spencer's, and if you've got 50 quid's worth of stuff and you've only got 20 quid in your pocket, they don't say, oh, okay, we'll let you have it this time, we'll make it up next year, which is what accountants try to do. They justify the fact they'll only sell it for 20 quid this year because we'll make it up next time. That's a recipe for stupidity because you're locked in this year, next year, and every year to come with a £20 starting point. So, you know, everything starts, the success of pricing starts at the beginning of the relationship. If we could go back in time to the beginning of each of our relationships, we could have so much more money. Obviously we can't, but we can start all new pricing relationships in the right way, and we can revisit the old ones with the sort of language I used before, we've taken a look at the way we priced, and it just isn't fair to anybody and it isn't working for everybody, so we're making some adjustments. We've now got this new approach that's bringing fairness and openness and transparency.
Yeah.
See, one of the questions there is just asking again where that software can be. Details.
What's the email address?
Anybody who emails me at steve@stevepipe.com, I'll send you details of where you can track down the software and the other free stuff I talked about. I mean, the software isn't free, but there is plenty of other free stuff as well.
Okay, a few questions there as well with the letter of engagement. I don't know whether they can access it in the control panel.
This one, is it?
I've seen a couple of questions about that as well, yeah.
Okay.
Just, I don't know whether it was in the control, but I suppose we could send it out anyway to...
Oh, yeah. Where can we find the AE letter of engagement? Yeah, we'll send that on to everybody afterwards. Another few questions here. Now, I think somebody might be think that you're a payroll bureau, Steve. But I suppose it's a question that we could ask here or answer here. Do you use Nest for most or all of your clients? So.
Yeah, I think that's a question. Well, I'm not an accountant. I am a fully qualified accountant, proud to be one, but I don't run an accounting firm, so I don't deliver AE services. So I literally can't answer that question.
Yeah,
you guys might be able to give some hints.
Well, we see probably, I suppose, about 75% of our employers that actually go with Nest. I suppose I suppose the attraction with Nest is that it's government backed, and they have to basically have to accept any employer that actually applies to them. Whereas I think some of the other schemes can be a bit more picky and therefore mightn't accept all the clients that are presented. So I suppose that's one of the reasons why Nest is kind of a default scheme for a lot of people.
Yeah.
And there are no costs to the employer as well, which is another big factor.
So somebody there said they missed the start of the webinar. What fee range would you see working for AE? So that comes in from Mike. So just to let Mike know, firstly, that we'll send a copy of the recording on to you afterwards, because it gave some examples for to charge for up to 10 employees. I think we used in the example there. So rather than just going through all that again. So another question here, I think it's for us here at BrightPay. So any views about the alternative master trust providers? Excuse me.
Well, I think we wouldn't necessarily have any views. That there is a lot of literature or guidance on the pension regulator's website about choosing a pension scheme and various factors that you should take into account. So I'd probably recommend to actually go to that website. As I said before, there's things like, is it going to be free to the employer? Can it accept all employers? Does it work with your payroll system? There's various factors that you need to take into account. We wouldn't know, which ones perform better in terms of, pension returns at the end of the day and stuff like that. So, that wouldn't be in our scope.
Very on the fence on that one.
So I have one here, Vicky, if you could take this one. I'm currently using HMRC's basic PAYE tools, and it doesn't seem to have any automatic enrolment functionality. Can you import the information from HMRC tools into BrightPay?
Yes, that is possible.
two options are available to actually bring in your information, just your employee details, or especially at this point in the year where we're 2 months into the tax year, to actually bring across year-to-date information as well. And it's literally a 1-minute process to import into BrightPay. So it's something quick, and you just start where you left it off.
And that's probably another example, coming back to the manual versus computerized system. If the HMRC basic PAY tools, it's a very manual process, and it's certainly manual when it comes to automatic enrolment. So you really should look at tools, whether it's BrightPay or other payroll software tools that can automate, sending all of the letters and everything that I suppose Vicky went through in the demo. Okay, so another question, maybe for yourself, Steve, and Paul probably. How much extra would you typically suggest charging if a payroll was weekly instead of monthly?
Well, if you want me to, I can just show you how. I actually don't know the answer to that, but I can show you what the software would calculate.
Yeah.
The pricing software. If you want me to share my screen again?
Yeah.
I don't think I can close the software down, and it has. You can price payroll in it. So if I go back in and go through my optional extras, I just didn't focus on this one, but there is a payroll. These are the defaults, bearing in mind. So we get through to the payroll bit here. So the first question it asks for payroll is it salaried payroll or hourly? Let's say it's weekly, and there are 6 to 10 of them. So it will calculate. It will factor in. Sorry, down here. It's factored in that price now. That's not particularly helpful because we didn't. Let me take it out a second. So it was £612 a month. If we add that payroll in, it's taken that up to £720. So that's added £108 a month for a 6 to 10 person weekly payroll. I can't remember what the exact question was, but if I go and play with some other parameters, so if they had switched to hourly, if it was monthly instead, 6 to 10, then the price is 643. Obviously, there's a lot fewer payrolls to do, 12 instead of 52, and so the monthly investment is significantly lower there. So the way that this particular software does, these are the defaults. Bear in mind, you can make it more complicated if you want, but it really just looks at monthly and hourly and how many employees they are, monthly, weekly, hourly, or fixed, and then it also gives some a 3, 4, and 5 star approach around that as well. So again, it's bringing in those same ideas that we've been talking about lots, and allowing you to price, and it's separately here for P11Ds. If there were 2 P11Ds, that's increased the price. And if I'd gone into the back office over here, I could factor in AE and price that as well, and offer a 3, 4, and 5 star AE package and link to Word files that explain what they included and so on. One really important thing to mention, when I'd labelled these 3, 4, and 5 star. In your example that you used earlier, Paul, you'd had bronze, silver, gold, and platinum, I think. Some accountants get hung up with the idea that, well, if I'm offering a bronze service, doesn't that imply that, or a 3-star service, or whatever my cheaper service is, does that not imply that I don't do a very good quality job at that level? And it's one of the hang-ups that prevents accountants moving to that kind of tiered or menu pricing approach. And I think the metaphor that I would use is that BMW, the car manufacturer, have always offered historically 3 main colours. They've got a more complicated range now, but they used to have a 3 Series, a 5 Series, and a 7 Series. Now, the fact that it was 3, 5, and 7, the 3 Series was still the ultimate driving machine. They were all great German technology. They were all great cars, but the 3 Series was a lot cheaper than the 7 Series. Not because it wasn't a great car, but because it's smaller. It's got less rubber, less metal, less horsepower. It's not the quality that determines whether it's a bronze, silver, gold, and platinum, or 3, 4, 5 star. It's the scope, it's the range, it's what's included within the bundle. And again, accountants, I think, need to get their head around that, because until they do, they are frightened that, well, if I offer that kind of, that kind of tier, aren't people going to think I do a rubbish job down at the 3-star service? No, it's just a smaller bundle.
Yeah, no, absolutely. I think you really need to get your pricing right in the beginning. I know I read a lot of discussions on Accounting Web, and accountants and bureaus are talking about how to move their clients from weekly payroll over to monthly payroll. So and I definitely have seen a few comments that they charge the same for weekly payroll, for that month compared to monthly payroll. So, there's no differentiation from the client's point of view. What's the, they just want to process the payroll weekly because it suits them, it suits their employees, but obviously it takes the accountant way more time to process weekly payroll compared to monthly payroll. Okay, so I think there's just one more question here, and that's just for us. Does BrightPay work well in terms of reporting to Aegon? I think that's how you pronounce it.
Aegon, yeah. Aegon is one of the 16 pension providers that we support. So yes, that means we can do the contributions files, etc. All the relevant files for upload.
Okay, yeah, I think that's everything. That's all the questions. So thanks so much, Steve. That was really, really interesting, and really,
great pleasure.
Really enjoyed the Q&A as well there in the end. So thanks so much. As I said, we'll send a recording on to everybody along with the PowerPoint and Steve's details as well. So thanks a million, and have a good day. Thank you. Bye, Steve.
Thank you, everybody. Have a great one.
Bye.